Hello and welcome to this special episode of Budget with BS. It is the day before the budget and Finance Minister Nirmala Sitharaman has tabled Economic Survey 2022-23 in the Parliament. To explain, decode and help us understand, we have with us veteran journalist A K Bhattacharya. He is the editorial director and former editor of Business Standard. He has covered 40 budgets and 40 economic surveys, and I can't think of any better person who can help us understand the economic survey. Welcome to the show,
Thank
AKB.
you. Thank you, Ruchika, for being so kind and generous.
So you've covered so many eco surveys. How is this survey different?
Well, the character and content of pre-budget economic surveys have changed uh, mm, quite extensively in the last 30 years, let's say, post the 1991 economic reforms.
Yeah.
There was a time when economic surveys would be presented just as an account of how the economy fared. And along with that, there would be a slew of recommendations, suggestions, ideas from the finance ministry, particularly the chief economic advisor, to say that what needs to be done, subsidies need to be cut, tariffs must be brought down. I'm talking about the post-reform days of 1990s.
Yes.
Then came a phase starting maybe in the noughties, or the 2000s, and we saw economic surveys becoming theme-oriented, issue-oriented. The trend was started primarily by Kaushik Basu, and it was refined and taken to a very high level by Arvind Subramanian. And then his successor, K. Subramaniam, also followed the same trend. This survey is a departure. This survey by Anand Nageshwaran is a throwback at the surveys during the days of Shankaracharya, Ashok Lahiri, Arvind Virmani, minus the recommendations for what policy changes need to be done. There are hardly any recommendations in this survey to say that what needs to be done, what the finance minister should do in the budget or the coming budgets. But in terms of analysis and assessment of how the economy has fared, how it will do, what are the challenges ahead of the Indian economy, I think this survey is a fairly realistic assessment of what currently awaits the Indian economy.
But AKB, it was the recommendations that always gave us, the headlines for the eco survey. So what is the big headline now? Because there are no recommendations.
You're asking me to write the main copy of the paper, but the real headline to my mind would be what kind of economic growth that we can anticipate in the coming financial year.
Yes, he's talking about 6.5% baseline growth.
That's right.
And he has mentioned why we can achieve that growth, but I'm sure there are a lot of concerns.
He has given a 6.5% growth rate next year. Let me contextualize it. The first advance estimate put out by the National Statistical Office early this month, the first week of January actually, it said the current year, that is 22-23, would end with an annual growth rate of 7%. Now, next year, the chief economic advisor believes that it will be down to 6.5% is the base rate, and a range of 6% to 6.8%. Now, why he says this is pretty interesting. He says that there are limited health and economic fallout that one encounters in the coming year. Then there is inflationary impulses would be very much under control. The China's emergence out of the COVID crisis that it was, it was suffering from is a good sign that the global demand will probably revive. And finally, he says that the animal spirits in the Indian industry are back.
Yeah.
Which means the investments will be there, the balance sheet repairing is over, so the financial cycle is also coming back. So these are the broad reasons why he
Yeah.
thinks that growth will be at around 6.5%.
But these are all the upside.
Yeah.
What is the downside?
Well, there are many downsides, and one of the key downsides he identifies is that the monetary tightening phase could be a risk. In a sense, as you know, that the Reserve Bank of India from May 2022 uh, uh, kept raising the interest rates steadily with every monetary policy review. There is uh, legitimate expectation now that in February, the Reserve Bank of India may review that position after what the economic service talks about as a possible risk to growth momentum in the economy. So you can say that probably the RBI, the Monetary Policy Committee, will take note of what the economic survey says and may not continue the rate rise sequence.
Yeah.
There are also other risks that the chief economic advisor thinks. For example, the risk of China. If China comes back into what it was doing, so the oil prices may go up, and the oil prices going up would mean India's import oil bill would go up.
Yeah.
It will also affect India's external account to a great extent because exports are slightly not seeing the kind of growth that one saw in the first half of the current financial year.
We will come back to that. But before that, I want to touch upon inflation, which is a subject that, it concerns us all. And if we read the survey, he seems very concerned about the food inflation. There are a lot of riders he's put there. But the good thing he's talking about is that the volatility is over. And he said that it's going to be a lot less stiff in the next financial year. What is your reading of the whole inflation situation?
Well, I think he is counting on quite a few positive indicators. There is something called the base effect also. Inflation going forward will be measured against a higher base level of the first half of 22-23. Then also you will see that the overall the demand situation may pick up with the economy coming back to its normal cycle of growth. So that might give a push to inflation. But I'm assured by the surveys that the chief economic advisor is quite candid about underlining the importance of both fiscal measures and monetary policy measures. As you would know that I think on 8th of February, the Reserve Bank of India's Monetary Policy Committee will meet and decide on what should be the monetary policy stance of the central bank. I think there's a signal for them that, hey, fellows, you better be careful because inflation management is important and inflation is now on a kind of a declining trajectory, so you take care.
AKB, you talked about external sector, and the survey has also talked about external sector with a bit of concern, do you think? Because export outlook is flat and some of the other things that he has mentioned.
I'm glad you raise this issue because if you look at the entire economic survey, you will see that this is one area which is a clear cause of concern for the chief economic advisor. On everything, if you look at industry, you look at unemployment, if you look at tax collections, climate change issues, energy issues, digital, the survey is quite gung ho.
Yeah.
But when coming to the external sector, I think the survey gets a little serious about what lies ahead. Serious in the sense that it is not very, very categorical that things will go its way, clearly. So while the survey says that the external situation will be manageable, which is a great cause for relief. But there are risks, and the risks, as you rightly pointed out, the exports outlook is not looking very good. Imports, if China comes back into the world economy in the same way as it was a few years ago or even before COVID, then oil prices will once again go up. The commodity price cycle will once again be up. Now, if those things happen, India's import costs will go up again. Two positive things in this external sector thing is that India's forex reserves are still at a healthy level, over $530 billion, if I'm not mistaken. And second is India's services sector. The services sector continues to do well, and as the survey points out, that the services sector share in global exports has actually gone up quite significantly.
So he's also talked about the CAD in.
Yeah, I mean, the current account deficit is the cause for concern, and he hopes that it will be manageable because of forex reserve situation and services sector exports. So these are the two areas where he sees a ray of hope, which will help the government manage these adverse situations.
One question that is on the minds of a lot of people, because eco survey happens a day before the budget. Are there any indications of what to expect in the budget? Does it indicate anything?
It's a difficult question. I know that in the past, many people have tried to read many signals out of the economic survey for the budget, and they were proved completely wrong. Because the economic survey is written and produced by the chief economic advisor and his team, but the team that presents the budget is not necessarily listening to what the chief economic advisor thinking. So, chief economic advisor is the person who advises the finance ministry what should be done and should not be done. As I said in the beginning, this survey is almost devoid of any such recommendations that the budget could pick up. There are two recommendations that have somehow slipped in. One is on the production linked incentive scheme, PLI scheme. The survey is very bullish on it, and short of saying that it should be extended to more sectors, it says how well it has done in addressing the concerns of the Indian industry. That's number one. And number two, it advises that to manage inflation, not just the monetary policy authority should be careful, but it also says that the government should be careful in managing its fiscal priorities, which essentially means that mind your borrowing level, which translates into saying that you must cut your fiscal deficit. So there are two signals from this survey. One, PLI schemes should get a boost, and number two, the fiscal deficit will see a cut.
Oh, that's interesting. One of the common refrains that the CA, I see, like a lot of things have been contextualized to the 2 years of pandemic, and it takes the whole global situation also into account. Interestingly, in this first chapter, he's talked about that India's recovery from the pandemic was relatively quick, and growth in the upcoming year will be supported by solid domestic demand and pickup in capital investment. But overall, I wanted to get your view on what is the survey's outlook towards pandemic? Is it over? Are we in the post-pandemic world now?
Well, to quote the economic survey, the survey seems to draw a lot of satisfaction from the fact that the impact of pandemic is almost over. You pointed out about how the survey is taking more, long-term view. This survey also does a lot of international comparisons with similar situations in the past, and keeping that in mind and seeing what the current state of the economy is, it actually says the following words, and it says that the Indian economy in financial year 22-23 has nearly recouped what was lost, renewed what had paused, and re energized what had slowed during the pandemic and since the conflict in Europe.
I think that is a very good note to end this discussion on. Thank you so much, AKB, for summing up the sense of the survey for our viewers so nicely
Thank you for
and
having me here.
succinctly. Thank you so much, AKB. Always a pleasure. Thank you so much for watching. Do tune in tomorrow for our coverage of the budget and an exclusive chat with AKB again on the budget. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.